Welcome to the weekly Los Angeles housing market update for April 22nd, 2024. This is a video series that I haven't made in a couple years. I've decided to resurrect it because the housing market in Los Angeles, as in the rest of the country, is a little bonkers in 2024. The format this time around is going to be a little bit different. We're going to start by covering the national weekly numbers as reported by Redfin. Then we're going to look at a news story that should inform us in some small way as to how we should be thinking about the housing market that we're in. Then we're going to look at local Los Angeles weekly numbers, also reported by Redfin. And finally, I'm going to share a Los Angeles listing of the week. This is a listing that I think is illustrative of how buyers or sellers should be thinking about this housing market. So let's dive right into some numbers. And we, of course, start with mortgage rates, which are perhaps the most important single number defining the housing market right now. As you can see, most recently, mortgage rates were at 7.44%. And the story here is one we're familiar with. Rates dropped quite a bit at the end of last year when the Fed announced they'd be making 3 Fed rate cuts in 2024. But in the last 2 weeks, rates have seriously climbed as economic data has made it more clear that the Fed will not be making 3 rate cuts this year, maybe not even 2. Maybe not even 1. The big question is are mortgage rates going to stay where they are, around 7.5%? Will they climb closer to 8%? Or is there any chance that we might actually see some mortgage rate relief before the end of the year? All right, let's look at some national market numbers. We start, of course, with the median sales price of a home in America, which this week reached $380,250. That's just $3K shy of the peak we reached in June of 2022. And just to recap, 2024 has actually been a very strong year for price growth. The beginning of the year was relatively flat, whereas most years we actually see price declines in the beginning of the year, even here in 2021. And then since our, bottoming out in late February, that's when prices really hit their lowest point of the year. The rate of increase in 2024 hasn't been as strong as 2022, which is when rates doubled and prices really shot up as people rushed out to buy a home, but more on par with last year, 2023, and even 2021. By the way, side note here, there's going to be a few technical glitches, rough shit around the edges. I'm going to improve this in the weeks to come, I promise. Now, even though we're 3K off of the pricing peak set in 2022, we still have the highest monthly mortgage payment in history at $2,775. Now, right here in 2022, this is when homes became prohibitively expensive as rates shot up, but home prices didn't crash. Now, for the rest of 2022, we had this pricing band between about $2,200 and $2,500. It seemed like homeowners couldn't pay more than $2,500 per month, but would always stay above $2,200 per month. Then in 2023, $2,500 a month became the new floor, $2,700 became a new ceiling. However, now, in 2024, we've sort of just gone nowhere but up, and we've broken through that $2,700 ceiling. So the question for the weeks ahead is the average monthly mortgage payment going to cool off and recede, or are we going to reach $2,800, $2,900 per month? Obviously, the cost of a mortgage does not depend just on rates. It also depends on pricing, which has everything to do, in my opinion, with inventory. Right now, inventory is sitting around 832,000 units nationally. That's up 9.6% from last year. That's a very good sign. We want more inventory to keep prices from climbing any further this year. In terms of months supply, we're looking at 3.3. That's great. That's the highest month supply in the last 4 years at this point in the year. Median days on market is at 35 days. That's slightly below last year. That means even though more inventory is beginning to pile up on the market is still moving pretty quickly, faster than last year at least. One way to look ahead is to look at new listings coming to market. Fortunately, new listings are up 10.8% over last year. This past week saw 93,000 new listings. Now, listings aren't growing at the pace that they were in 2022 and 2021. That's these two lines. But at least we have a lot more listings than last year, 2023. Again, to look into the future, we can look at price drops. We're at a pretty high level right now. 5.6% of homes have had price drops. This is getting pretty close to the 6.5% peak that was set in 2022. So hopefully we will be seeing some price softening in the coming weeks. Average sold price to list price ratio is at 99.2%. This is a bit higher than last year, well below 2022 and 2021, but as you can see, trending upward. And lastly, we need to take a quick look at mortgage applications. Mortgage applications are an excellent indicator of future demand, because obviously you have to apply for a mortgage before you can buy a house. Let's zoom in on the past couple months, and it's clear that mortgage demand, the index is at 145.6. That's, as low as it has been for weeks. Now let's go to our news item of the week. Our news item of the week comes from the New York Times, which reports a huge number of homeowners have mortgage rates too good to give up. On a scale not seen in decades, many Americans are stuck in homes they would rather leave. And there's an incredible chart in this article that I just want to jump straight to. So in this chart, this black line is the average existing mortgage rate. So as you can see, mortgage rates dropped and dropped and dropped, and then really dropped during the pandemic, and since then have risen. Now the gray line is the average existing mortgage rate. So as you can see, as rates drop, the average existing mortgage rate slowly drops with it as some people get new mortgages. Obviously, lots of people hold their old mortgages, but new buyers are coming into the market at new lower rates, and also some buyers who bought at higher rates refinance their mortgage into lower rates. Since 2022, however, rates have gone up dramatically, meaning the spread between a new mortgage rate and an existing mortgage rate is 3.2 points. It's 3.2%. This is the largest that this spread has been ever. Typically, the average existing mortgage rate is higher than the new rate. That's been the case almost all the time over the past, 20, 25, 26 years. And when the average existing mortgage rate is lower than existing mortgage rates, it's by fractions of a point. Very few homeowners in the past 25 years have ever felt like the rate they have is significantly better, or really much better at all, than the prevailing rate that exists for a new mortgage. However, now we're in this new paradigm where we have this massive 3.2 point gap between the average existing mortgage rate and what's available for a new home buyer on the market. This is why inventory is so low. I mean, it's one of the reasons why inventory is so low. But just looking at this chart, you can see how dramatic a situation we're in right now, a situation that we've never seen before. And we got to keep that in mind when looking at the market. Now let's go into Los Angeles' local numbers. All right, we start with the median sale price in Los Angeles. Right now we're sitting at $875,000, 6% over last year, and interestingly, almost exactly where we were at this point in 2022. In Los Angeles locally, the beginning of the year was, weak, was usually weak, was kind of standard in that prices dropped at the beginning of the year, as we usually see. Prices then abruptly climbed, and in the last few weeks, we've actually seen a stalling out in housing prices. What's going on in Los Angeles? You would think maybe inventory is beginning to rebalance, but that's not what we're seeing in the data. Active listings in Los Angeles right now sit at 11,449 homes. That's down 3.7% from last year. Furthermore, active listings was climbing, but has since leveled off. If we're going to see more price relief in Los Angeles, we're only going to see it if inventory picks up. Looking at month supply of inventory, we're at 12.1, which is just over 3 months of supply, which is exactly where we were last year at this time, and markedly higher than where we were in 2021 and 2022. For new listings, we're at 1227, which is slightly better than where we were last year at this time, at 1147, but obviously much lower than in 2022 and 2021. Looking at the percentage of homes with price drops, we're at the highest point we've been at this time of the year, at 3.7%. That's well over last year's 2.8%, and of course, way ahead of 2022 and 2021, both of which are around 1.9%. And in Los Angeles, the average sale to list ratio is 100.9%, also represented as 1.009. Again, this is higher than last year, meaning the market is a little hotter than it was last year, but still significantly weaker than 2021 and 2022. Now let's check out this week's listing of the week. So right off the bat, I'm just going to tell you this week's listing of the week is a flipped property which hasn't sold yet, and it's listed right now at $2 million. What I want to do is take us to the old listing, the previous listing. This property was on the market last year. It started being listed at $1.89 million. Price dropped to $171. Price dropped to $1.475. And finally, the flippers were able to pick this property up for $1.425 million. And let's just take a look at this property. This property is in South Pasadena in a very cool, hilly neighborhood with lots of views. Looks a little old on the outside, yes. And then we get into the inside, and it looks really old. And not old in the sense of mid-century or old in the sense of 1920s build. Old in the sense of 90s boring. You have these orange floors. You have this old furniture. You have this old stock fireplace. Ugly tile floors. The kitchen is really dated with these white appliances and a silver fridge. I imagine there's a white fridge in there when the house was originally built. Carpeting on the stairs. Carpeting in the hallway. Carpeted bedrooms. Super dated 90s bathroom. Okay, I think you get the idea. Now, this home was built in 2001. A 2001 build in Los Angeles, especially in a hillside neighborhood, is going to be a very well-built home. So the flippers, when they came in to flip this property, really all they had to do was a fully cosmetic flip. And let's take a look at what that looks like. So on the outside, they gave the house a paint job with sharp contrasting colors. They also put new garage doors on the house. And I have to say, this is really smart because when you drive by the house on the street, which I've done several times, the biggest thing you see really are the garage doors because that takes up the entire first floor. So simply by putting these modern garage doors on, it modernizes the whole look of the house. And in the listing photos, the first thing they showcase is this modern new kitchen. The living room has been updated with contrasting colors, a new floor, and a much sharper looking fireplace. No more carpet on the stairs or in the hallway. No more carpet in the bedroom, and a very modern bathroom. Okay, so this house now flipped is on the market for a cool $2 million. It's been on the market for 24 days, so it might not sell for $2 million, but I want this house to be a lesson for everyone. Without some cosmetic fixes, this house sold for $1.425 million. It's now listed for $2 million. Maybe it won't sell for $2 million. Maybe it sells for 1.9, 1.8. 1.8 would be a great price for this much square footage in this neighborhood. Lessons for everyone. If you're a home buyer, look for homes that need cosmetic upgrades. You can actually create a ton of equity by buying a home that needs solely cosmetic upgrades, doing the upgrades, and then enjoying this fresh new home. For sellers, think about doing some work before selling your home. If you can upgrade the living space, upgrade the kitchen, remove carpeting and put in new flooring, treat yourself, go out of town, get an Airbnb, upgrade your home, and you can really create a ton of value and a lot more proceeds when you sell it. And then, of course, for investors, look for properties like this. It's a 2001 build. There's not going to be anything wrong with this home structurally. Obviously, you'll do an inspection and make sure to fix any leaks or serious problems, and then give it a cosmetic once-over. I mean, the home's been on the market for almost a month, and it was purchased in December 2023. So this was, from start to finish, a 4-month job. I think the people who flipped this home probably put 100, 150K into it. So they're into it for 1.675. I think they'll sell it for at least 1.8. That's a minimum $125,000 profit in 4 months. All right, that's this week's weekly Los Angeles housing market update. This is the first, which means it's the worst, which means they'll only get better. What have you been seeing in the LA market? Let me know in the comments below. I'll see you next week.